Hey there, Beajhim. Want to unlock the secrets of the stock market? You've come to the right place. We're diving deep into the exciting world of buying and selling stocks. It's your money, Beajhim, and we're gonna make it grow. You know, the stock market can seem like a jungle. It's full of twists and turns, with bulls charging and bears hiding. But don't worry, I'm here to be your guide. Think of it like this. The stock market is like a giant flea market. There are tons of different items or stocks for sale, ready to become a stock market whiz, Beajhim. Let's do this. Timing, Beajhim, that's the name of the game. You don't want to buy high and sell low. We want to buy low when everyone else is scared, and then sell high when everyone else is clamoring to get in. It sounds simple, right? And it can be, Beajhim, once you know the secrets. Think of it like surfing, Beajhim. You wait for the perfect wave, that perfect moment, and then you ride it all the way to shore. Get ready, Beajhim, because we're about to unlock the vault and reveal the secrets of stock market timing. Alright, Beajhim, let's break this down. You know how some companies make stuff like those sneakers you love? Well, those companies are public, traded on the stock market. It's like a giant store where you can buy a tiny piece of these companies. These pieces are called stocks. When you buy a stock, Beajhim, you're basically becoming a part owner of that company. If the company does well, its value goes up, and guess what? Your little piece of the pie becomes more valuable too. Now, Beajhim, let's talk about those stock prices. They're always moving, always fluctuating, like a roller coaster at the amusement park. See, those prices are driven by supply and demand. It's like that limited edition sneaker everyone wants, Beajhim. The more people want it, the higher the price goes. Same thing with stocks. If a company is killing it, if they're innovating and making big moves, investors get excited. They want a piece of that action, so they buy more stock, driving the price up. But if a company is struggling, if they're losing money and making bad decisions, investors get spooked. It's all about sentiment, Beajhim. All about how confident people are in a company's future. Now, Beajhim, the stock market isn't the Wild West. It's got rules, regulations, and a whole bunch of players. You've got your brokers, your exchanges, your analysts, all these folks in the mix. Think of it like a basketball game, Beajhim. You've got your players, your referees, your coaches, all working together, or sometimes against each other, to make the game happen. The stock market is the same way. You've got your companies, your investors, your regulators, all interacting in this complex dance we call the market. We'll learn about different types of orders, like market orders and limit orders. We'll talk about trading strategies like day trading and value investing. Remember, knowledge is power, Beajhim, and we're going to arm ourselves with all the knowledge we need to succeed. Alright, Beajhim, let's talk about finding those hidden gems, those undervalued stocks just waiting to explode. This is where value investing comes in, my friend. It's like going to a flea market and finding a Picasso painting in a pile of junk. See, Value investors, they're like detectives. They dig deep, Beajhim, looking for companies that are trading for less than they're actually worth. Think of it like this. Imagine a company that makes the best darn pizza in town. Their pizza is to die for, Beajhim, but for some reason, nobody's buying it. You buy the stock when it's cheap, and when the crowds come rushing in, you're sitting pretty, my friend. Now, Beijing, not all great investments are about finding those undervalued gems. Sometimes you gotta ride the wave, catch those growth stocks that are on fire. These are companies that are expanding rapidly, innovating like crazy, and disrupting entire industries. Think about those tech giants. Beajhim, the ones changing the world with their gadgets and gizmos. You gotta spot those trends early on. Identify the companies with the best products and the most potential, and then jump on board. You got to know when to hold them and when to fold them, my friend. Section 3, News Flash, Earnings Reports, and Market Sentiment. The stock market constantly reacts to news and events. 1 minute is up, the next is down. Earnings reports drive stock prices. Every quarter, companies release financial results. Investors analyze these numbers closely. They want to know the future outlook. Good reports can send stocks soaring, while bad news can cause a plunge. Beating expectations excites investors. Missing the mark causes panic. Market sentiment plays a huge role. Section 4, Don't be a hero. Start small, diversify, and be patient. Before you go all in, remember these golden rules of investing. Don't be a hero. Start small and invest only what you can afford to lose. Diversify your investments across different companies and industries. Be patient. Investing is a marathon, not a sprint. Focus on the long term, and your investments will grow. Section 1, Ring the register. Taking profits like a pro. Okay, you've done it. You bought low, the stock soared, and now you're sitting on a pile of profits. Congratulations, my friend. But now comes the tough part, knowing when to cash in those chips. It's tempting to hold on, hoping for even bigger gains, but greed can be a dangerous thing. One strategy is to set a target price, a level where you'll be happy to take your profits and move on. Think of it like a get out of jail free card. Once your stock hits that price, boom, you sell, no questions asked. Section 2, Cutting your losses. Knowing when to fold them. Sometimes the best move is to cut your losses and live to fight another day. Remember, hope is not a strategy. Set a stop loss order to limit your losses. Re-evaluate your investments regularly. If the story no longer makes sense, move on. Section 3, Reading the tea leaves, economic indicators and market cycles. Remember, Beajhim, the stock market doesn't exist in a vacuum. It's influenced by a whole bunch of factors like interest rates, inflation, and economic growth. Keep an eye on those economic indicators, Beajhim, those barometers of the economy's health. Pay attention to things like the unemployment rate, consumer confidence, and gross domestic product, or GDP. And remember, Beajhim, the market moves in cycles. There are bull markets characterized by optimism and rising prices, and bear markets marked by pessimism and falling prices. Knowing where we are in the cycle can help you make smarter investment decisions. Section 4. Staying disciplined, sticking to your plan, and avoiding emotional traps. The stock market is a roller coaster of emotions. Stay disciplined, stick to your plan, and avoid emotional traps. Fear and greed can trip you up. Market dips can be buying opportunities. When the market's soaring, don't chase hot stocks. Diversify your portfolio and take profits. Stay disciplined, stay informed, and be patient. Alright, Beajhim, let's talk Apple. You know, the company with the iPhone and those fancy computers. Back in the early 2000s, they were considered a risky bet. Many folks thought they were down for the count, but then, boom, they released the iPod followed by the iPhone, revolutionizing the tech world. Investors who saw the potential early on, who understood the power of innovation, made a killing. Beajhim, a killing. See, that's the beauty of growth stocks. You're betting on the future, on a company's ability to disrupt and dominate. Apple didn't just release new products, they created entire new markets. Apple is a prime example of how a well-timed investment driven by innovation and a keen understanding of the market can lead to massive returns. Section 2. Ford driving through the dip. Now, let's talk about a different kind of success story. Ford Motor Company. Remember back in 2008 during the financial crisis, the auto industry was on the brink of collapse. Companies were struggling, and Ford was no exception. Their stock plummeted. Investors were running for the hills, fearing the worst. But some savvy investors, those value investors we talked about, they saw an opportunity. They knew Ford had a long history, a strong brand, and a loyal customer base. Ford recovered, reinvented itself with a focus on fuel-efficient vehicles and innovative technology, and their stock rebounded, making those value investors a tidy profit. Riding the tech wave with Amazon. Amazon's stock market success is legendary. Talk about a wild ride from a tiny online bookstore in the 90s. Dismissed as a fad, Jeff Bezos had a vision. He built an empire. Early believers were richly rewarded. Amazon stock soared. It became one of the most valuable companies. Spotting disruptive technologies is key. Identify visionary leaders. Catch that wave, and it's unforgettable. Section 1. Timing is everything. Beajhim, we've covered a lot of ground, from the basics of the stock market to the thrill of buying low and selling high. Remember, it's not about getting lucky. It's about understanding the game. Spot those undervalued companies like a hawk. Ride the wave of growth stocks, but know when to bail before the wave crashes. Keep your ear to the ground. Listen to those market whispers, and watch those economic indicators like a hawk. Remember those Apple geniuses. They knew timing was everything, and those Ford folks, they held on tight, weathering the storm to reap the rewards. Be like them. Be a market master. Section 2. Now go get 'em, Tiger. The stock market is not for the faint of heart, but for those brave souls. those savvy investors willing to learn the ropes. It's a world of opportunity. Remember, knowledge is power, and now you've got the knowledge to conquer Wall Street. Don't be a stranger. Share these stock market secrets with your friends. Spread the wealth, and let's all make some serious dough. Hit that like button, smash that subscribe, and stay tuned for more money-making tips from yours truly. Now go out there and make me proud.